A very good morning, guys. For an entire week, this market has been holding its breath for one number, one line in one statement, that is the RBI policy comes out today, a little after 10 a.m. in the morning. Every trade on the screen right now, every position the big money is sitting on is a bet on what that RBI statement comes out. Today, the wait ends. This is the Tanmay Edge. You are listening to episode 54. I am Tanmay Gurdagoti. Let's go. Let me grade yesterday first because that's the deal, you and I have it. So 5 calls on expiry day, 3 landed extremely clean. I said the Sensex would pin between 73,400 to 73,500. It landed exactly in the middle. It closed at 74,360, dead inside the range. I said Nifty would hold 23,300, get capped under 23,500 and stay jumpy below 23,450. It closed at 23,416. Half the day was 23,465, never touched 23,500. And I said the foreign money was short and hedged. So respect the cap and don't chase the upside. The index went nowhere. Up just flat, that is what it had. And the volatility, that is what cost me yesterday. I told you to stay long the strangle into today, but yesterday was expiry, and the moment those options settled, the volatility gauge crushed down to 15.89. Long wall lost money on the crush. Now the real test of today's trade is on the decision itself, because volatility can spike the instant in the statement hits in. But on that day, that leg was a miss. I am owning to it. So 3 out of 5. So now today, and one number is what we are looking at, is the RBI policy. The market expects RBI to hold the repo at 5.25. A hold is the base case, is what we are looking at. The real question isn't the number, it's the tone. Does the bank sound relaxed and done, or does it sound worried, flagging the oil shock and the weak rupee, warning that it's watching? That tone is what the market will trade on, not the rate itself. Rate is going to be at 5.25 with unchanged most likely. And here's why this matters so much today. Look at how the big money is positioned, because it is most lopsided board I've seen in weeks. In the index futures, the FIs are now net short 264,000 contracts. They didn't just hold that bet into the decision, they added it to it yesterday as well. That is the most defensive they have been this entire run. On the exact other side of the trade, the retail clients are sitting with 203,000 contracts on the long side. And in the cash market, our DIs bought again yesterday almost 4,000, that is 3986 crore. So of buying was done yesterday. So picture it, FIs pressing short, the smaller traders leaning towards extremely long trade, and the wall of domestic money underneath is holding up the sell-off that is coming in. Everyone is coiled, waiting for the same 10 o'clock trigger. The option market, meanwhile, is pricing this surprisingly calm. The volatility on weekly Nifty has crushed to 13.5. The straddle, the cost to bet on a move either way, is only about 324 points. That tells you the market, before the decision, expects a quiet outcome. But that's the trap of an event day. The calm pricing is exactly what blows up if the tone surprises. And here are your levels for today. And this morning, they just shifted their tone. On Nifty, 23,300 is the support, the heaviest stack of downside protection. 23,500 is the protection or the resistance, and is the wall with over 7 million call contracts sitting over there. It's also the switch, the line where the market flips from jumpy to calm. We closed yesterday at 23,416, just under it. But here's what changed overnight. GIFT Nifty has firmed to 23,573 and is now pointing to an open above 23,500. That matters. If we open above that wall and hold it, the switch flip happens and we enter into a positive gamma territory, and those 264,000 foreign shots are offside from the very first tick. The next stop above it is 23,700. So if 23,500 holds up, the next level to watch for is easily 23,700. And hold above it and the squeeze is live before the banks even speaks. Lose it and we are back in the 23,300 to 500 zone. Now let me map the 3 ways this goes, because you want the plan before the market starts. 1. The bank holds and sounds relaxed, dovish tone. That's the relief case, and remember, we may already be opening above 23,500. So this just pours fuel on a squeeze that already lit up. Volatility crushes the 264,000 shorts that FIs are carrying should start covering in, and the market runs towards 23,700 and beyond it. If you see that, you don't sell options into it, you respect the squeeze and play a directional call spread. 2. The banks hold but sounds hawkish and watchful, the base case, and that is the expectation. Rate is steady but a warning on oil and rupee that should come in. This is the sell news outcome, and this is one that turns a gap up opening into a trap. It slams back below 23,500 into the box. Volatility still crushes because the event has passed out, but there's no clean direction. We chop between 23,300 and 23,500, and that is where the trade is of patience. You sell the premium only after the statement lands it, not before it. 3. The surprise, an actual rate cut or a real shift in stance. That's when it gets violent. A cut would squeeze that giant FI book as hard and fast, a sharp move on the upside. A hawkish tone stock lets the short win and we crack below that 23,300 mark. Either way, the volatility you would long finally plays in. The rule in this case is simple: don't trade the first move, let it run it. And the backdrop favors the calm hold as well. Crude has cooled again. Brent is down near $95 and is under 96. The 10-year bond yield is steady at 7.02. The two things that could force the bank hand, runway, oil and spiking yields are both quietly placed. The only soft spot is the rupee, still weak at 95.79 to dollar, and that's exactly what bank's tone will speak to. Overseas, US closed at a record on the S&P, but Asia is heavier. Korea is down 3%, Nikkei is down over 1%. So the global mood is cautious, yet our own GIFT Nifty is buckling up and is trading at 23,573, leaning into the decision with a gap up. That's the home crowd betting on a friendly hold up today. So here is your Friday in one breath. We are set to open about 23,500. The foreign shorts are already under pressure, and at 10:30, the Reserve Bank speaks and releases a week of coiled position. Do not sell volatility before the print happens. The calm is a trap. The one line that matters from the bell is 23,500. Hold above it and the squeeze runs towards 23,700. Lose it and the gap up was a trap back to 23,300 box. If the tone is soft, the shorts get a run over. If it's hawkish, we get slam backed and the choppy session starts. If it surprises, respect the move and don't fade it. The big money is short and the locals are buying, and one statement decides who was right. My tag for the day: gap up into the verdict. 23,500 is the line. Hold it and the shorts would squeeze out. Lose it and we are back into that 23,500 zone where the grinding would happen. Let the decision lead it. Don't front run the bank decision. If this gave you a clear plan into the decision, share it with one trader friend who needs it right now. Subscribe so that you never miss a morning podcast and you get an update and notification as well. You can stream every episode free on rupeecase.com, and I'm waiting for your reviews, guys. Tell me what's working for you and what's not. This has been the Tanmay Edge. I'm Tanmay Gurtagoti. I'll be back after the bell, and have a happy weekend, guys, and a happy policy as well. See you all once again on Monday. Until then, stay sharp.